I remember when I joined the finance function, I asked this question: when can we have an update or upgrade on the accounting rules? And someone told me that it only happens every 1 year, where we get a release of the change. Then I thought this is boring, that this is the only change or the creativity in the changing the rules. But later on in my career, I discovered that how the basic foundation can be fit differently in different industry by different entities in a different regions, or how to be used. So giving that context, I'm really excited to have you, Amel, in that discussion, because today we're going to discover how the finance can vary from one industry to other industry, giving you expertise. Welcome to the show.
Thank you very much, and very excited to have you and to join me for the podcast.
Okay. So we start our podcast today by introducing the guest through his or her purpose in life. So let me ask you, what is your purpose in life?
That's a tough question. So I would say pretty basic for me. For me, just to make the life of the people around me better, easier. So it comes to my husband, close family, friends, and the people I work with. That's pretty simple and pretty basic, but really try to get their life better. And if I have to think about something a bit broader, so I'm Algerian born and raised. I grew up in Algeria and I studied and I worked a bit, and then I went abroad and I traveled in different part of the world and I worked in different places. And after a while, I felt the need to be back to the region, to be back home, and to try at least to bring what I've learned, and even a tiny impact if I can have in the region. I think that will be good, like great success for me.
Okay. There is a say that the purpose is coming from the struggle, and everyone crafts his or her own purpose based on the foundation that they went through a challenging journey. That's why they create their own purpose. Does this mean that you went through, as normal, a struggle, people helping you, that's why you decided that you're going to step up and craft your purpose based on that way?
Yes, definitely. I think it's a good reading. I grew up, again, as I told you, in Algeria. I think it was, again, just getting to a higher school, higher education. I was really pushed by my parents really hard because they wanted, like, just for me to achieve and to study as much as I can, as long as I can. And then I got opportunities. I really moved outside of the country, and I moved to multiple parts of the world. So I worked in Europe. I worked as well, like covering different regions. I lived in London, lived in Paris. And I was only able to do that because I had a lot of people that I met along the line who helped me, who believed in me. I remember when I moved to the first international role, my English was very basic, extremely basic. And I worked so hard for the interview just to make sure that I get the job. And I think my first manager realized that, again, my level was not so great, and he was amazing. He was really helping me, even crafting email, making it basic to really help me to progress. And I cannot be more thankful than that, because you have, like, it's really the people that you met across your journey that really helped me to get what I am and believed in me and pushed me. And that's why I think for me to be back in the region, I think there is the growth, or even the future, is really in this region. When I talk about the region, I mean the Middle East and Africa at large. I think the growth is coming from here. Massive population of young generation. They're getting smarter and smarter. They're very talented, a lot of ambition, and there's resources as well. So I really believe that this region has so much to give. And it's our duty, again, the people from this region, to come back and really try at least to bring back a bit the knowledge that we gathered across the globe. So it's really the reflection of probably my personal journey.
Okay. I don't want to leave this stage. If I go back again to the foundation, how did you end up with your career in finance? How did you pick up finance?
I would say more like finance picked me up.
How?
I was very entrepreneurial when I was studying. I created two kind of companies with one of my friends, and we were dreaming of having our own company. I think the first one was like something that doesn't exist anymore. It was Advergame, which basically you create games and you add, like you fund it through advertisement in the game. And then you manage to like some simple games that you can use on the phones. And we failed miserably. Then we were thinking, okay, a magazine, a free magazine, like free access to information, funded through advertisement, and our target was student who didn't have enough means and money but needed to get access to qualitative information. And we said, okay, we're going to give it to them for free, but obviously we'll have to make it work, so we can fund it through advertisement. So I really tried those two ventures, and at the same time I was studying as well. And then when you get to your master's degree and you finish your MBA, you're like, okay, now I maybe need to validate that with an experience. So you get the first job. And then I got a company who approached me, and they had internal graduate program in finance. And it was a 2-year span where you just travel the world and you work in different businesses, countries, and you get to learn the finance in different functions. So I had, within 2 years, I've experienced a large, at scale, like the spectrum of finance, what it can look like, from operations to compliance to commercial finance to risk. And I kind of fell in love with that, because again, you have that picture and that image of finances, back-end office, a bit like hidden somewhere in the basement.
Exactly. That's exactly my question. How did you fall in love with finance?
And because I found I was in a company was very industrial, and where, again, and when you think about it, it's like it was motors and turbine and big factories. And you would think it's probably boring and annoying. And then when you start understanding, okay, your engine, what can actually generate electricity for the whole city or the whole town of people who never have access to electricity. And you're working on a project like that and you try to craft it. It's over 25 years terms that you need to go to, and you need to make sure that your contract is safe and it's secure. And then you're committing for 25 years, but it's a healthy business that you're engaging to, but at the same time, you're creating such a big impact on people's lives. And this is where I think I really realized that finance can play such an important role in making the right decision and protecting the company on the long term, at the same time doing the right thing and really creating impact on people's life, like getting as well with the right pricing, with solutions as well, creative solutions. So I was working on a solar plan in Egypt, where no company was able to fund and give, because back then, and I think the country as well going through similar issues, is that the country was very hard to get foreign currencies into the country. But the plant, you needed solar panel coming from China, and you needed EPC, like all the work needs to come, engineering coming from abroad. And the local company who wanted to build that couldn't find funding to do that. And so I was working on the project, and we were selling just a portion of the plant, and it was a dead end. We tried with all the different banks to see who can help and who can fund for this project.
Okay.
We even went to World Bank to get guarantees for the country because it was backed by the ministry, and we really tried everything possible to help that local provider to make the project work. It just didn't work out. And after a few months, I was on a very random training on factoring. And one guy in the company was explaining what they were doing, what are the offerings we have internally, factoring, like buying invoices on your behalf. They give you cash at discount prices. And it just kind of, like light bulb just came out. And I was like, oh, maybe it's something that we can do. So maybe it's something that we can fund internally, agree the customer to pay for that discount, And then we get the cash because internally we have a structure that allows us to do it, but no one have ever done it before. It was something super creative, off the track, like no one did it before. So we went back around the table negotiating, and we got different teams to start brainstorming and think what we can do. And ultimately, long story short, but 6 months later, we were able to secure the deal with internal financing, and now the plant is up and running. So that's what I love about finance. Sometimes you end up in places where you can, because you're the only person as well who has that angle. And that view, where the business are operations or marketing or sales, where finance, you're really at the backbone and you see everything. Like everything that's happening has an impact on finance in a company, anything.
Okay.
So you would see it, like you have that 360 view, and you're able to kind of sometimes come with creative solutions. So that's kind of how I find a bit of passion in finance. And I've been seeing that, and again, from there, that's how kind of what motivate me and push me to try to find similar things in everything I do.
I think that's a relevant point when it comes to finance and how you leave an impact. I'm sure whenever you visit Egypt, you will be curious enough to go and just pass by this project and see up and running as we speak now, and you see it was purely your idea or finance idea. One of my guests in one of the episodes said that project finance or finance and function, they can put any idea alive, or they send it to death in a way or another. So how we come creative with a compliance to support the business in a nutshell, and that's the beauty of finance. That really be the backbone of the business. So speaking about this project, and based on your experience, Amel, in that you have across the board experience for different industry, which is something unique. Unique when it comes to the finance, that you have all of this experience from non-tech tech companies. Unique when it comes to the female CFO as well, for so many years, mashallah, very good job in that. And at the same time, as you said, different geography, not only in one country or two countries, you're across all the board, across all the region. So in that sense, back to our subject, which is finance in the tech industry, before we jump into the details of that, given your experience, what did you observe in the finance function difference between electric companies or non-tech and tech companies, if I may say?
Yeah. So I think I remember there's a quote that one of my teachers when I was in program told me. He said, finance is the language of business. So there's so many languages that you can speak, but it's just the language that allows you to understand the business. So for me, there's as many finance as there's business out there, a business model. There is a basic foundation that you were referring to earlier around accounting and compliance and risk, that we need stability. Otherwise, we will end up in financial crisis and crash. So you need that stability, and you need to always revise it regularly with how the world is changing. Now we're talking about data, we talk about ESG with sustainability, and so on. So you'll have to revisit those foundation regularly to make sure that you're up to date with the market. But then when it comes to business, finance needs to adapt to the business, not the other way around. So for me, and even like the way I approach any new role that I take or any new company that I join is first understand what the business needs. So usually it sounds quite basic, but usually the first question I ask my business partner is, how can I help? How finance can help? And I really start from there to understand the business model, to understand what do we want to achieve, because you have companies who are driven by growth, and some are driven by profitability. Some are driven by cash generation. Some are driven by usage, numbers of increase. So each company has a different need, and they have as well different level of maturity. So you have a startup who will not have the same need as a mature company. You will not have the same need in a company that is highly regulated, like health or health then versus retail. So you have different regulations. So your needs are very different. Competitive intensity as well play a role. So as long as you understand your business, then your finance needs to adapt to it. And finance, its role, primary role, is to make sure that you're achieving your target, you're on track, you're making sure that you're giving your investors the return that they're expecting. So an investor, sometimes they're not looking for a direct return right away. They're not looking for dividend, but they want you to take over some market share or grow in a specific market or launch a new country. So the finance needs to make sure that you adapt to make sure that you're tracking your performance to the goal that you set to achieve.
Okay.
So that's why for me, like again, finance can be very different from, even within tech companies, you'll have very different type of finance for every type of industry. Usually like they're very similar. When you're in the same industry, you kind of get the same model. But yeah, in many companies, it's very different.
Okay. So I have a question here. When I read that the finance need to adapt to the business, and the business can vary between an objective of gross, cash, or revenue, for example. There is a say that within the same company producing, for example, cooking oil, for example, just for example. In the cooking oil, you have one product that objective of that product is to grow. And another product in the same company, which is just to generate cash. And then there is another product that is only purpose, very premium, niche, to only target revenue. So I mean, within the same company, you can have different products that can serve different purpose. But how this related to an entire company difference between non-tech and tech as a total company? You see what I'm saying?
Yeah. So I think on the first one, again, there's the overall company still have a goal to achieve, even if it has a diversified portfolio. Overall, there is an objective, an overarching objective that they need to achieve. So maybe if we're saying, okay, a company needs to grow, but can have to fund it internally. So what it will do is that the product that are high margin, stable, they will try to get as much as profit, and they will drive that business on profitability that will help them to fund for the next innovation, the next year product. Typically, if it was a Blockbuster when Netflix came in, if they could have continued to Blockbuster like the old way of sending CDs to the consumer, and then use the money that they were making on late fees in that business to fund a new business model that is streaming, typically what Netflix, or even buying Netflix, because they came in and they say, hey, we want to be bought by you if you're interested, and Blockbuster said no. But again, like you could still fund your future product or within the next company, but then you'll have an overarching objective into the company. Now to your question, how can it be different from tech and non-tech? I would say there is again within tech, as I said, like there's not a simple and straight answer. But what tech does, and companies that are digitally native, they have tons of data available at their hand. They have probably much more data available than old companies have. So the tech, what usually and what they need to do, not everybody's doing it right now, but how do you use that data to make sure that you're getting as much insight as possible, as much as data point, comparison, insights, prediction, to make sure that you're running your business in a efficient way. And what is different as well with technology is that before the retail store, you close it and you know your working hours, where in your digital world is nonstop. If it's marketplace on Amazon, people can buy nonstop at any time of the week,
Correct.
any time of the week, any hour of the day. So you need to make sure that you're building all your processes and all your finance metrics and KPI along that. So you will track on a daily basis, where in industrial companies, we're more on the 25 years term and we have time. We have a bit more time and our lead time are much longer. Production can take 7. Just manufacturing car will take a very long lead time. Wherein if you're in the retail or marketplace, for example, it's daily. Anything, whether like there is a rain, you have an impact right away into your operations. There is a strike, there is a shortage on electricity. Anything can have a direct impact, significant impact in your operation. So your finance needs to be built in a way that you're able to track and manage your business on a daily basis. And that is very different than the way you would operate a non-tech company.
Okay. I have like wealth of questions based on what you said as you speak now. I just want to spare one section for data later on, because that's a big unique thing about the tech company. I fully agree with you. But just want to go back to the maturity as a question. How do you define the maturity of the company? Let's focus now on tech. How do you find that this tech company is mature, or on a scale from 1 to 10, it is 9 in terms of maturity, or 5 or 6? And do you have any financial metrics on that measurement, that there is a financial aspect to consider to define the maturity of the business as well in terms of tech company?
Yeah, I think it's very hard to give like a simple answer to that one. I think depending on the benchmark, the industry where you are, what are you can be very mature in one city and completely new in the new one, right? So like you have to define what are you looking at. So let's take an example. I want to be in Dubai. Is the company mature in Dubai? And it's a marketplace, I don't know, say food, for example. Let's take the food industry. And maturity level, if I start, and do I have enough offering? Do I have enough restaurant offering? And my card, is it rich enough that I can cater for all the needs, and like for breakfast to lunch to dinner to desserts and to all the areas of the town within short ETAs, like timing, like within 5 to 10 minutes delivery, or like 20 minutes delivery, or whatever. So that in terms of maturity, this is what you would measure. How my product is efficient, how my customers are coming back, are satisfied, are engaged. And on the other side, especially on the marketplace, you have two sides. You have the customer side, and then you have the restaurant side. Are the restaurants happy? Are they sticky to the platform? Are they staying and coming back and keeping the relationship strong? So the maturity level is, again, how efficient is your product or your platform, and how much you are achieving as well profitability. Because usually when you're growing, when you're in a hyper growth, you invest a lot. You invest significantly. So sometimes it's either you invest because you want to take market share on a space that already there's competitor already existing, or you're coming up with something completely new and you need to build the behavior, you need to build a marketplace that never existed before. So you'll have to spend a lot of money on referrals, people have to test, and you have to invite friends and family to come in, and we give you incentive to make sure that we get you in, and we keep you for few shopping sessions until you like it and you can't do without it, and then we can stop incentivizing you, and then we can become profitable. So I would say the maturity is the quality of the product in terms of efficiency, and then your level as well of profitability, if you're able to achieve it or not. And it could be cyclical, right? Like you could mature to a certain point, and then you want to, okay, now I want to try something else, or I want to expand my portfolio and do something different. I want to add new product. I want to do now quick grocery instead of like just food delivery. I want to do ride hailing. I want to do, you name it, like all the options available. And then you go back into another cycle of I'm starting and then I'm maturing. There is this really nice chart, and it's very common and very popular in the tech world, in startup, where they call it the hockey stick, which is, okay, you're starting very, very small, you're creating the market, and then there's a hyper growth until you reach your scale, until you reach your volume, and then you stabilize, and then until the next wave. So when you reach the maturity, is again another, then you have every cycle has a challenge, right? You reach a maturity, how do you stay relevant?
Of
Because
course.
tech is evolving.
Consumer is evolving, behavior is
Exactly.
evolving.
And you need to keep feeding the machine more and more and serving the customer more and more. Because again, when he got used to something, you need to maintain it. When a customer is used to a level of service, you have to maintain it, and it has to be top notch, or someone else will come and do the same. Especially if you're building a new market, the new entrant would come in and he will build on whatever you've already done and can enhance it with a little bit of investment, so that he would need much less investment than you did originally and can do it better. So you have to always keep ahead of the curve, keep investing all the time, to make sure that you're maintaining your position. So yeah, it really depends on the phase where you are. And then you can be very mature in one city, and then the next day you're like, okay, I want to expand to a new market, get into a new country, and then you're back from scratch.
Okay. So you define the maturity based simply on the product as a concept maturity, the efficiency of the process, the profit of the product, the customer and consumer combined together that they are coming in, and their market share. That can be defined of the basic elements of the maturity in one location, in one market, of course. As you said, if you go to other market, it will be other risky, or you're gonna start from scratch in that sense. Now, just want to highlight the risk assessment on the tech companies. Based on my background, I never worked for tech company. That's why I'm curious to know. So the risk in non-tech companies will be until the sanctions, fuel prices, raw and packaging material increase, because we have a manufacturing as a non-tech company in that sense. But then you highlighted that if you have a rainy day, it will directly impact your operation in that sense. So how finance in tech company, I know it's a very fragmented segment, but as a sample of one of the tech companies, can cater for the risk associated with the tech operations in one of the regions? Yeah.
So I think I'll just give you then few examples, very concrete example. So if I take marketplace, where we operate on a daily basis on a market, so we're working with consumer. So let's take the example of ride hailing. So you referred to fuel prices. Any fuel price, the drivers will not, their costs to a ride will increase. So it will make less sense for them to operate. So you'll have to reflect the prices on the riders and increase the prices when the fuel price goes up, to make sure that you're protecting the earnings for the drivers. And then you impact that into the riders. Inflation as well, devaluation, when it happens, you'll have to adjust all your pricing constantly on I would say on daily basis, but almost like you always have to be cautious of how your currency is moving, how your all the different components are moving, to make sure that you're protecting the partners that you're working with, either the drivers or the riders on the other side. Then you have regulation as well. You refer to regulation. Any regulation have a direct as well impact on the business, on the industry. So you have to comply with regulation. You have to have authorization. Every market has its own rules. Taxis have license. Ride hailing as well have laws. And in the tech world is very on a broad scheme of things. The regulators are catching up on. So they had first to understand how this word works, what are the impacts, what are the positives and the negatives of all those tools, because you would say, like, for anything, if it's tech or even like when machines were created, it could be tools or weapon. It can be used for good and it can be used for bad. So the regulator as well is catching up and adjusting all its regulation. You think about GDPR in Europe, where we're trying to protect consumer with data protections and so on. So you have to comply. All the companies now have to comply and have to change and adapt. And then you have it in all aspects of everything you do. Regulation as well is key and important. As I said, weather conditions, political instability, economical crisis, forex availability, anything that is happening in the market has a very direct correlation with your business. So as a finance person, what you have to do is it's our old forecast and planning tools that you'll have to leverage, but you have to do it in a very efficient way, and you have to be super agile. Like you have to be able to build all your processes to be as quick to action as possible. So that's why we do daily forecasts, we do weekly forecasts, we reallocate investment every week. When we see, okay, this market is tracking down, like we have to reshift maybe the money we've put it in one market, and then we see that, okay, it's not taking the traction we want, and we see another market that is struggling because, and then we are able within the same week to be able to shift direction and adjust. We do a lot of testing. We do, like, we call it the A/B test in all the tech words. So we just test, like, you don't have to go full scale, but you just test on small cohort. And because you have access to the consumer directly through the phone in general, so you're able to test and be very precise and test and learn before you scale it. So you'll have to be super agile. And finance needs to help, and we build the entire processes around it to make sure that we're able to help the business to react as quickly as possible. Because you will lose. It's very easy to lose market share. It's super hard to regain them. Consumers get really bored very quickly from one app to another. They can switch. It's very easy. Like you have your phone and you just have apps across your phone. You just switch from one another. It's not like I need to go to this shop before and I have now to drive 45 minutes to go to the other shop. It's True. All in my phone, and I can switch very easily. So how can you make sure that your customer stays with you and they're happy and in all aspects, like on both sides? And you have to make it daily. You have to make sure that, and you're fed with data. You're fed with data. It's there every day. So how do you make sure that you use them in a smart way and in a way that serves you? Like there's plenty volume, super high volume of data, but which one is relevant for you? That's why what I was saying earlier is that finance needs to help the business and needs to be built based on the business. So I understand my business need. I look at which data I can use to help me make the right decisions, and help me to get insights, extract insight to make sure that I'm making the right decision, or even adjust if I made a mistake, and it happens. But how quick I can fix it and I can change. So it's using data that is available, being super agile, very quick to the market to be able to react quickly.
Yeah. So I mean, in that sense, what I sense from your answer, that all of this has an impact on all business, whether tech or non-tech. The key difference between tech and non-tech, the speed to action. So if tomorrow the country declared a 10% increase in fuel, maybe other companies, they need to take a few weeks to assess the impact on the raw and packaging material, how much the stocks they have as a weighted average cost, what will be the impact in the P&L. But in your case, it has to be the decision has to be taken today, and the price need to be increased in a few hours from now. That's the key difference. Same when it comes to Forex as well. The decision has to be implemented, taken and assessed with a full impact and implemented in a few hours, in a few minutes, rather than other traditional business or non-tech business that they have the lead time of the manufacturing, safety stocks, and new batch orders and all of these. And the other point is the agility, which is, I think the finance team in tech company need to be super agile compared to any other industry. Because as you said, they reflect the business, and the business itself as a purpose is super agile in terms of business, not only finance. And the last bit, which is my passion for it, which is data-driven. Because in tech company, you have the data. And I hope it is well organized in a decent format, not a struggle with the data like any other business, but I just want to deep dive on that a little bit. How finance and tech company leverage on the data they have in their apps, in their consumer information, to take more precise ROI decision or recommendation for the business.
Yeah. I will give you just my perspective, my own experience. I'm not going to make a general statement, but it's really on my experience. So what I used to do and what I've seen is that we use a lot of the data based on operations. So basically, for example, I would look at basic financials metrics and KPIs, revenue, net income, EBITDA, cost, OPEX. But that's kind of my end state. This is like any company. I have my P&L, I have my balance sheet, I have my free cash flow, and my cash flow statement. And this is my end state. And I measure that on a weekly basis. But then the component of what is built to my P&L, that is what I cut it down into operations. What is creating my sales, which is again, like you would see it in any company, but what is driven, like how is my sales built is based on a very detailed components that are very operational. So when you look at them, it's not finance anymore, it's business. So how many volumes I'm selling every day? What is the retention? What is the shopping session? What's the lead time for a customer to convert? Are my customers churning? How much it costs me to resurrect? How much I need to spend on digital marketing to attract and retain? How much I need to do like brand media campaign to attract and build my audience. So it's all operational metrics that leads me to a financial result at the very end. So my end goal is finance, but everything else in between is built on operations. So, and then we work a lot with the ops team to make sure that we have a good understanding of what's going on a daily basis, like on quite regularly, to make sure that whatever we're building is getting us to the result we want. That is ultimately at my P&L. So my P&L is my P&L. I have a target, I have a plan, I have a top line to achieve, I have a EBITDA to achieve. But how I do it is I just deconstruct it into a very detailed view that I think what is different, what I've seen in tech versus non-tech, again, non-tech has the same logic. It's just on non-tech is the access of data pretty much on a daily basis that you can adjust always you're able to adjust trajectory in a much easier way than I would do in a probably traditional industry.
Okay. And given this complexity, how will you ensure your forecast accuracy in that sense? So if traditional business, there is a lead time, so at least the finance and traditional business, they can get the news and gradually they can reflect the risk or the opportunity on their forecast cycles. But if your impact is just sharp as the weather can impact operation today, how you leverage on data to get more accurate forecast in the future?
So there is forecast weekly. So every week, like beginning of the week, you forecast for the next 3-4 weeks, and then you adjust as you go. And then every Monday, you look at your past week performance, and then you see any deviation, try to understand and course correct within the week. Within the week to see if there's something, again, as I told you, like investment reshuffling, you do it on a weekly basis. And we usually, like, again, when you're building your forecast really based on operations, so you know exactly what went wrong. So with sometimes you're able to get better and better and better because you know where you deviated, what went wrong, so you make sure that the next time you're doing it is better.
Okay.
So that is still a bit of a traditional way to do it. What I've seen is what I love and a bit geeky about it is the machine learning models and using AI as well to generate your forecast. And in my previous company, we run a machine learning forecast, and we did it in parallel with our old-fashioned way of doing forecast. And so we kept them in parallel to make sure that we're not breaking the system. So after 6-7 months, we realized that the accuracy of the model was much better than people's forecast. Because what happens in machine learning, it's able to really compute tons of data that you as a finance person or as your business partner are not able to think about all the elements at the same time altogether. So it can compute tons of information to come up with a proposal. It removes the biases as well. If you train it, of course, like you have to train it as well. The model needs to be trained. It never gets it right at the very beginning, but you need to feed it with the right thinking process for you to get there. And then the accuracy was much better. Extreme, like the gaps were incredible to a point where like, okay, we're deprecating human forecasting and we're just moving with machine learning forecasting. You remove biases, you remove the extra optimistic people, the very pessimist people, and then you get to something that is much more balanced. And what you do, then you can spend as finance person your time on just understanding the forecast. You don't have to spend your time building it, but seeing the trend and say, okay, maybe I should do something different because the trend is not what I want. It's not what it's not the way I like it. I want to change trajectory. I can change direction. And this is where we became finance as the prescriptive business partner, more than the forecaster who would just tell them, like, directionally, this is what I see you going. But hey, if you do this, this is the outcome you could expect. And this is where, for me, finance should be, and it will be in the future. This is where we have a critical role to play. And this is what makes a company more successful than others, when you have people more like using the technology to be able to really play in the areas that are have much higher added value, and make the right decision and be able to shift quickly, than if you're still in the old world where you just look in what happened in the past and just assess like roughly what is going to happen in the next month or so.
Okay, I'm super excited for that subject. I think we need a dedicated episode for that. But just back to the weekly forecast in that sense. You've seen the traditional business and you've seen the tech business. And the minute you're going to say weekly forecast, that will create a panic in the finance function, because in the traditional business, it takes so much time to get the input. You've seen that in even the industry before tech. Yes. So, and you already jumped into my next question quickly when we said, if we're going to have a weekly forecast, how we're going to leverage in technology to automate that process, because we cannot have a weekly forecast with the traditional mindset. So in that sense, you leverage on machine learning and AI capturing that. And you've seen the real life example of the comparison between machine learning and human forecast. There is a doubt on that as a pushback, bear with me, that machine is limited to what we train and what data we feed in. And in our region, especially in the Middle East, your lovely region, and Africa, it's full of spikes. And when it comes to events that machine at this moment cannot understand or interpret to have the right level of the forecast. That's why we rely more on the human aspect, because they can relate more. What are your views on that?
So I think it's both. Like, we can't rely on the machine to give us the forecast, that's for sure. And it's not the purpose. What we rely on the machine is to compute for us a high level of data and digest it to something that we can make our man out of it. And we look at it and we say, makes sense, doesn't make sense, because it doesn't have it. And what I was referring to, the example before, where we trained the model for about 9 months and we tested it, we were teaching it as well as we go. Like, hey, Ramadan is not a fixed date. Every year is 10 days moving. You teach the model and it learns. And then from there, it's always going to take that gap into consideration and always reforecast based on it. The model, you can tell the model, hey, consider that next month there is expected protest in this country. And if there is a protest, then we are expecting those roads to be closed. Maybe companies will give some day off and use some of the example that happens in the past. And I can tag to you this date and this date and this date, this is what happens in the past, which you would do as a finance professional. Like, you would look at history and you say, okay, this is the trend last year. Like we do it with Ramadan on our forecast. We look at historical, what happened, what was the trend. Usually Eid, things will spike again and then it go down. And like you do those analysis, but the machine would do it at scale in a very efficient way with more data. For example, you have a country where there has load shedding, like there is no electricity for a few hours, and there's stage, like South Africa is a good example. It has a lot of shortage on electricity, and there's stage, and they're known, and you know the impact on your activity based on historical. So I know last month it was stage 4 of load shedding, so hence my volume went down by 20%. The week before it was minus 10% because it was load stage 3 or whatever. But you gave the tool, like the system, tons all those information. You feed it with all the information. You add your touch, and you tell the machine, hey, please consider this, please consider that. And what we've seen is that after a while, after it's been trained and it knows the business as not as much as you know it, of course, but it has enough insight, then it starts getting you good results. And those results, it's not like, hey, forecast, like machine said 100, we're going to take it for granted. And then you can spend time as a finance professional to try to understand that 100. Does it make sense? Should I trust it? Or maybe there's something that machine doesn't know, but I know because I was on the street, I was walking down the street, I talked to some customer, I know this is coming, the machine doesn't know. So that nuances we still absolutely needed from finance, but we should leverage the tools to take off our plate the things that are not like the most fun to do, and then spend time on the added value, qualitative things. And I think that's what like we're getting there. Like there's no companies, if they want to be successful, they have to do it because others will do. So if you want to survive, like you have to embrace it. And at some point it will come, and it will come at scale. I think when I was working, and I can name the company when I was working at Microsoft. When I joined, I felt like, oh wow, like the finance is like, it's the future. Like literally it's like 10 years from what I used to be. Like the previous company when I joined, I was shocked by how advanced it is. And it was 5 years ago. So, and even from there, like they progressed even more, and in finance as well. So, and they probably were the first one to do it, but there's a lot of companies that are doing it, and they're at that level of maturity today. And now data is available, it's accessible, it's cheap. Now we see, with ChatGPT, like all the tools that are available. So there's more and more companies will embrace it and use it. Then if you want to be successful, any company needs to embrace that technology.
Okay. So speaking about the fun, I just have one fun question. There's a very, very good fun subject which is related to data governance, especially for the finance people. People look at us in the business that we are the custodian, the gatekeeper when it comes to the data security on the company, especially the financial data. How do you think the threat or the weakness point of the AI, machine learning, ChatGPT, whatever external artificial intelligence tool will work closely on securing and keeping our company financial data? How are you going to manage strike between leveraging full speed of the technology and at the same time keep our data safe?
Yeah, I think there's a lot of, again, it's a real concern, and I think the companies need, and that's why the regulator plays as a play as well, to make sure that the companies who are managing the data are in check and making sure that they are protective. A lot of like the lawyers used to be involved in like what are the terms and conditions we're getting with the supplier to make sure they're very protective of the data. What are the compliant, like again, I was referring to EGDP for Europe. There are rules across the world that are there to protect the data. And I think the big companies who are now hosting the data, for them to be successful, they need their customer to trust them with their data. If they want to grow, the only way for them to grow is people to trust them and use their tools. So it's in their interest as well to make sure that they are using, and then they're very protective with the data they have that the customer gave them. Because otherwise, if this is broken, they will lose business. They will not be able to operate. So there is a real balance that I think big companies and data, like the companies who are like cloud-based, who are hosting all the data, are very cautious about that. And they're doing, I believe, everything that is possible to protect it, to make sure, again, for them to keep the business operating, keep customer coming back, is by offering that trust and that safety. But on your side, as a company, when you want to integrate or digitally transform, you need to make sure that you're thinking thoughtfully about it, like set level of data security, what is accessible, like again, layers of data hierarchy, what is extremely sensitive, what is okay to be shared. When we talk about ChatGPT, I think it's a good example. We're testing ChatGPT Enterprise and what its capabilities, and we're doing it with a pilot. It's like 2,000 people in the company, and we're testing it. And we're testing it in a very safe space. So commitment as well from ChatGPT is your data will only be, whatever is created will going to be remaining within your own universe. And there's, again, contracts and legally bounded agreements to make sure it is the case. And then for the people, like there's a lot of education and teaching for people, like how to use those tools. What can I tell ChatGPT? What can I ask him? What I can feed him as information? So I am playing around with a bot, like a ChatGPT bot, like creating my own and just testing it. But like, yeah, we have to go through screening, like from legal to tell me, hey, you can, this is the level of information you can train the model with. Don't give it like internal information. Don't give it this and that. There's a lot of education as well that needs to happen to make sure that people are complying with that level of safety. But I think companies need to as well educate their team. Like before, we used to, even like financials, people would like, you can't print the P&L and take it away with you at home or leave it on a desk somewhere. It's the same education that needs to happen as well on how to use the tools and how to use them in a safe way. And again, finance has a key role as well to play there, because again, any technology investment has to go through finance for approval. Right? Like we're the one approving the POs at the end of the day.
I know. That's the power we have.
So we should use it as well to make sure that questioning everything that is coming our way, to make sure that it is used in a safe and a very safe way, and we're protecting the company as much as we can.
Okay. So now I'm left with two questions. Okay. The first question is ChatGPT Enterprise. Based on the experiment that you're trying now within your current scope, and I think it's limited to a number of employees at your end with a scope of limited data as well, how do you see the chat with your own bot? What kind of questions you ask without disclosing confidential information, but what kind of discussion you're chatting with?
It's amazing. Like you can, it's open, like you really can create anything that you want. So basically I tested, for example, on investment ask. And I trained the bot. So basically I'm like, okay, I want the finance team, and again, it's really on a test and it's like just me geeking around.
Yes.
But I want, for example, all my associate, junior, or even like mid-level team to have the same thinking process when it comes to investment ask. So when their team comes to them like, hey, I want to spend X, what are the thinking process they should go through? So I'm playing with the ChatGPT bot and I'm teaching him how you should think as like, I'm like my co-pilot, like the finance co-pilot, where you would just ask the questions. So you have set of like, the set questions at the beginning, and it says, hey, how should I think about this investment ask? And obviously when you start, like it gives you very generic answer.
Of course.
That is basic, or look at the ROI.
Yes.
Check or competition, like super basic. And then you start training it and you're like, okay, no, in our company, this is how we look at it. We look at it in this angle and this angle. This is the KPI you should be asking. You should look at goals of the company mid-long term. You should question what is the impact on competition, what is the impact in this and that, and then make sure that, okay, you talked with these stakeholders and these stakeholders. You want to make sure that you're going through the governance that we have in place. There's investment forum. There's things that can go through the email. These are the threshold. And then ultimately, and you should present it in a way that is digestible for your like leadership team to approve it. And this is the format that you should use. And then now, like with the chat, you can literally go in and then you're a junior, like someone just onboarding that is new to the company. And what I found it fascinating is that you can then make your entire team at least at the same level of thinking, because obviously within the same team you have superstars and people who are like just getting along. So you want that level of superstars, like, and then upskill everywhere. And you give them the tool to be able to do that. So I just, for that is amazing. And then I test it with data dump data, like dummy data,
Yes.
with few, like very simple, few lines, 3 columns, random numbers. And I put it in the chat and I said, hey, can you get me some visuals and extract 3 key insights?
So we're going to go back. So simple table with a few numbers. You throw to the chat and then?
And then I asked the chat, like, hey, can you give me, I gave it a name to the chat, like I feel like very like my best friend now. And I said, hey, can you pull me some visuals and give me 3 key insights that you get from this data? And within a second, give me like few charts, a few like bar chart and like different visuals that you can just copy paste into a PowerPoint or presentation, whatever. And then it just drive like really high level insight, like, hey, I see this market's going up and then there is a combination between this and that, and this is kind of what I see. And then I said, okay, get some data from, go browse the internet, because you have to give it option to go and browse the internet. And this is my industry. And these are like based on the country that I gave you. And now you know the industry that I'm at. Can you get me more insights from what you know from the market? And it just goes and do some browsing.
Internal data.
It can have the capability
your
to
friend
go browse.
can combine both external and internal data in a few seconds for you.
A few seconds. And at least you have basic. And I fed him really with like, honestly, like super basic table that was so random, like no number made sense.
Imagine if we give access to the entire data set that we have. That will be an amazing.
And it's impressive because then you, like, as I said, like you get super started, but at least you kind of levelize and try to get the team, upskill everyone at the same time, upskill your company at scale. Like you don't have people, like you're not, oh, this is the guy like who's very smart, like he knows is the go-to person for this topic. You don't have to bother that guy anymore, but just use it on the platform.
Okay. So my last question for you, giving this context of the ChatGPT, if we have part of our audience that they still at the university or fresh out of the oven, a graduate student approaching their career in the finance industry for tech and non-tech, what will be your advice for this generation?
Oh, I think just being open and agile, like be very curious. I mean, I'm not going to tell you, hey, just go learn to code or, go learn ChatGPT. I mean, maybe in 6 months, there will be a new technology that will be out and ChatGPT will not be relevant anymore. But the roles, even in finance, I think in the future now we need accountant, we need analyst. Tomorrow we will need data architect. We would need data scientist. We would need storytellers. We would need a very different set of skill sets in that function. So the young generation needs to learn those tools. They still need to learn the finance foundations.
Okay.
Accounting will always be there.
Okay.
The rules, again, to be a good finance professional, you need to know in and out your accounting. It doesn't mean that you will be doing the T accounting, but you need to have a very good understanding, because again, business is the same. It's still like 100 years back, the logic is still the same. It's a market, customers, suppliers, and a regulator. So the business will always be the same. So foundation of finance will always be there, and they're super critical for someone to be successful. But the tech part is as critical. And I think it will be much more accessible as we go. Like you see it, like it's just now intuitive, where before you have to go through a long code. Now it's much more intuitive, much or easier. And the tools are here, they're free, they're accessible, people can test and learn. So I think for me, like if I would have loved to have those tools when I was a student, access to a wealth of data that is available. So just keep curious, agile, try to learn, always adapt, because things will change much more than before. Like we see it every 6 months, there's something big and new coming up. Probably in the future will be maybe every month or every 2 months there's something new as well.
Okay. So at the end of this episode, I think you took us on a journey. This is Finance 2.0, 3.0, 5.0. Somewhere else. I'm not sure how we're gonna go back to the traditional finance after you said. I think it's even a struggle for you whenever you have your own discussion within your own bot with a trial data, and then you got an email request for the traditional requirement on the business as usual as well. So imagine people from non-tech industry as well, in that sense. And I love the passion that you show when it comes to, especially when it comes from a finance person. The energy that you drive and the curiosity for the technology and trying a dummy data set and get some excitement about having internal, external data analysis as well. I think that's a role model for a basic skill or behavior for a finance person everywhere, regardless of the hierarchy. We should have the same mindset. Amel, that was really lovely discussion. I did enjoy it myself. I was super excited as well to have this discussion. Thank you so much for accepting the invite, and it's really a pleasure having you on the show.
Thank you for having me. It was great to be here.
Thank you.